My portfolio, along with many others, just took a hit, and I know we're all starting to wonder, are we on the edge of a market crash? So for today's video, I've got something special for you guys. We're going to take a look at a few different indicators that lead to a possible sign of a crash, along with some stocks that I'm probably going to exit out of my position in, and some stocks I'm going to open up some new positions in. But before we dive into the stock side, I do want to look at some world news here. If we were to take a close look here at China, we're seeing some reports of a COVID 2.0 coming as scientists discover a new coronavirus in bats that could affect humans in the same way as COVID-19. And along with all the US stock news, I think this is definitely something we should be keeping an eye on, as we saw what COVID did to the economy the last time. The only reason I'm really shouting this out in this video here is just to kind of, get it up on the radar and get it talking about it a little bit. I think this is something that could definitely have a bigger swing on the stock market than what we're currently seeing, as we saw back in 2020, 2021, whenever the stocks were kind of struggling there right before they started to rip. And I will go ahead and say I did pick up 50 shares of Pfizer, partially due to this news of the COVID 2.0 possibility, but as well as the tariff tax and its possible implications on pharmaceuticals getting an extra 25% tariff. That would be big news for Pfizer. So I think they've got two, really, really good catalysts that could possibly lift them up. And I know that we all definitely saw what Pfizer did during the last COVID run. So if anything were to happen, I feel like this right here is a great play. And I feel like he kind of hedges against the market a little bit. And even if the tariffs get canceled, COVID 2.0 is just some big rousey, you still have a stock that has a 6.53% dividend, which I think is an amazing hold long term anyways. So I'm very content just sitting on these shares regardless. Now that we've got that out of the way, let's get straight into it. We've got SPY down 1.71% on the week, and we are back to cooking in the fear on the fear and greed index. This is actually due to several factors. We've had recent data revealed that declined U.S. business activity and consumer sentiment. We've had Walmart issue a disappointing forecast, which, kind of raises concerns about consumer demand. We've also got United Health Group falling under, stock decline. Broadcom ended up, kind of getting cut off by Apple a little bit there. And, we've just got a big outflow of cash coming out of the S&P 500. A lot of people are cashing out with this market pullback. I think it's starting to scare some people, hence why the fear index is up. And overall, it's not looking pretty going into the coming weeks, as we don't really have any crazy news on the agenda. We don't have anything that is really set to either lift us up or put us back down even further. I think we're probably going to trend around this same price for a little while, which really sucks for the market because we've been trading around this same price point since November the 8th of 2024, which is something crazy to look at because right now you're actually getting better returns out of the high yield savings account than you are out of the market. And I think that's what's leading some people to pull their money out of the market. They're realizing, hey, I can get better returns elsewhere. And as more people start to do that, we will definitely see a decline in the S&P price. And we're definitely seeing a lot of news about a crash out there. It's something that's been popping up everywhere, headlines everywhere. Heck, I even named the video here, market crash incoming question mark. But what I think that we're overlooking is I don't think anything's going to happen until we start actually getting into these tariff wars. If tariff wars are on the agenda, obviously we've got the tariffs coming. But are the tariffs just going to be, here we go, let's just roll with it? Or is it going to be, a big war over these tariffs? And I think that the response we get from these other countries on these tariffs is going to really be the deciding factor on whether or not the economy rips even more or sees a big decline. So for now, I think we're in a hurry up and wait situation. I'm continuing just to kind of hold my positions and kind of watch out for them. I definitely don't want to sell anything quite yet. I'm looking to possibly add to some of my positions. I have picked up a JP Morgan long leap just in case, it does get a quick recovery. The banking stocks definitely took a hard hit this week, and I think that they've got a lot of room to kind of bounce back, at least on the short term. But like I said, for now and currently, I am not all that worried about it. Another thing I will note is I am currently sitting around 25 to 30% cash in my portfolio, which is something else that I really like about my portfolio currently. If these things do continue to dip and we do end up seeing, quite a big pullback, I have 10,000 straight up just ready to deploy into whatever, and it still would leave me with another 5,000 or so, to kind of just wait and see what happens. And that allows me the peace of mind that if this were to pull back, I'm still in a good situation. I'm not going to obviously lose everything. And it also gives me some really good buying opportunities if we do see a really big dip. So I'm not all that concerned about if it were to, take a strategic dip this week or next week, or even after the tariffs come out, we see, a huge dip. I've got a lot of money to deploy towards that, so I'm not that concerned about it in the short term or the long term. And I know we hear it talked about enough, but I think it's something we shouldn't forget. Over time, SPY does continue to go up. We haven't really seen a long period of time where SPY just continued to go down and never recovered. Over the course of its whole lifetime, it has always recovered. It's always came back stronger. So we just kind of got to hurry up and wait on this one, like I said. And currently, we're not even really close to the dip that we had in that 2021, 2022 section there. So I think we're just seeing a lot of panic coming from people, trying to assume that we're going to have a crash or something like that. But over the long term, you're way better off just going ahead and leaving your money in there and DCAing some more in. that's the plan I'm going to take. That's the approach that I've been taking. I don't plan on really changing anything up there. I might trim some profits off of my bigger positions, but I'm definitely in no hurry to sell. I've got plenty of time behind it. And if I were to make a big sell off or sell a lot of my positions, it wouldn't be based on my thoughts on the S&P 500 crashing. It would be a lot more based on me believing that I can get a better return elsewhere, as my end goal is to get the best return possible. So if I believe I can get a better return out of something other than stocks, whether it be real estate, whether it be a business, whatever, I will definitely pull it at that point. But I don't see any reason to pull it based on S&P crashes, as it's something that we've seen before. It's always recovered. I don't really think that it's anything to worry about. It's going to suck seeing your money go down, but being able to DCA and throw some more money into it over the long term, you're going to see quite a bit of success out of that. So that's what I'm going to go ahead and roll with for now. I want to go ahead and wrap up today with a Ken Fisher quote, time in the market beats timing the market. It's definitely something that's been on my mind a lot recently as I, look to possibly sell some of my positions. I'm human, we all have that voice in our head that tells us, now's the time to sell, now's the time to sell, And I think, just by turning that off and just DCAing in is going to be the best approach. We've seen it work time and time again. And why reinvent the wheel when we're already rolling? Thanks for sticking around to the end. And if you are more curious on some Trump's tariff stocks, don't forget to look at my last video. I'll go ahead and link it here. Until next time, take care. Peace out.